than just business news, we're news for business people.
Hello and welcome. You're watching Countdown on Bloomberg went live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The Indian markets trade in a narrow range amid low volumes. The Nifty hovers around the 10,400 mark. The telecom regulator releases its recommendations on net neutrality, says no services provider can discriminate on any content. The rupee scales a fresh 2-month high and trades above the key moving averages. And Ivanka Trump arrives in Hyderabad to participate in the Global Entrepreneurs Summit being hosted in India.
And we'll get you a lowdown of all that's happening out there with Tamanna a bit later on in the show as well. In fact, throughout the day today. So that's something you need to watch out for. However, what's happening in the markets today, just a bit of a nosedive in the last few minutes of trade. Nothing alarming, keep in mind. But we were trading marginally in the green and just a bit of a flash pullback that's come into the Nifty 50. Bring up the intraday of the Bank Nifty as well, or the Nifty Bank actually now. And that will come up on your screen. That too has had a similar downward move. I would presume it's the bank's downtick and the bank's leading this little bit of a downtick that we're seeing on the Nifty. But this is very erratic. This could well get arrested in the next few minutes. It could well be the case of the session today and very different tomorrow as well. So don't look out too much for that. Broader end of the spectrum, flattish. The heat map will come up on your screen. It was even Stevens for most part of the day, probably still is, just that some banks might have just fallen in the last few minutes. So SBI, I think, wasn't down so much, now down about 0.75%. So this is looking slightly weak today. There is weakness in IT, so watch out for that pack. And amongst heavyweights which are correcting include Infosys, Reliance, ICICI Bank and ONGC. I suspect if you look at the Nifty contributors chart, these four will be amongst the top contributors in the session today. On the gaining side, some gains for the HDFC Twins, which are certainly piling on the gains as well. Just a quick word on the volumes before I get in, Pradeep, for the broader end of the spectrum, and the volume should come up on your screen. At the start of the show, the volume's at about 4 lakh crores. Yeah, probably par for those. I think by the time we end, we'll probably be at about 6 lakh crores, and the cash volumes will be nudging the 30,000 crore mark as well. Let's wait and watch. But what about the broader end of the spectrum, Pradeep?
There are a good number of stocks moving up in today's trade. Some have been buzzing since morning, but some more have gained during the day. Look at VIP. The stock was up around 10% when I checked it last. Is still up 7% in today's trade. Rallis, it opened strong after the reported buying by an institutional player, and Rallis continues to hold on to the gains of 5%. Texmaco Rail, this is second day when railway stocks are buzzing, and Texmaco is the one which is leading up 8% now. There are reports that LIC would invest around 1.5 lakh crore rupees in the railway sector, and they have got the approval from Finance Ministry. Tea stocks are doing well, so Jayashree Tea and Harrison's Malayalam are two stocks really to watch out for in today's trade. So far, both are quoting very close to day's high. There is no pressure actually. If you look at some more stocks, Everest Industries, Religare were among a few stocks that are doing well with good volume in today's trade so far. On the flip side, you have Glenmark following those 7 observations on the Baddi unit, and also Zuari Global, a stock that has in fact moved up significantly, I guess around 30-35% in a week or 10 days, but today it's correcting finally down around 7% so far. But there are fewer losers than gainers, and actually if you look at the volume, it's definitely on the higher side if you look at the stocks that have moved up. Ravneet.
Markets have been trading in that narrow range today, but if you look at the futures and options trend, we've seen more of call writing coming back into the system, specifically for strikes like 10,500 and also 10,600. But if you go by the premiums, it's nothing. The 10,500 call strike has a premium of only 15 rupees, but watch out for the 10,400 call strike. That's added almost 7 lakh shares. The premium there is almost 50 rupees. That's telling you the upside for this market could be capped at around 10,450, whereas on the put side, the 10,350 strike, which is acting as a good support for the Nifty, has seen addition of almost 7 lakh shares, and the premium there is almost rupees 14 to 15. So on the downside, I think the first support will come in somewhere around the 20-day moving average for Nifty, which is hovering around that mark of 10,325. But overall, for Bank Nifty, which so far has been outperforming Nifty today, has seen a bit of pressure, and that's largely because the fall one has seen for the Nifty PSU banking space. That index is down almost 0.6% in today's session. So last hour recovery, what you saw yesterday, and we've been highlighting, that was on account of short covering. Probably some fresh selling has come in at higher levels in today's session. Just two stocks I want to highlight. The gas distribution companies have been doing pretty well, and one of them is IGL. Stock is gone up on very high volumes in today's session. It is trading at its fresh 52-week high. We've seen good amount of build-up for the November as well as the December futures. So fresh longs have been seen on the future side. And also Dalmia Bharat. Remember, the stock was up almost 5% yesterday after some news reports suggested that they have submitted their final bid for Modi Industries and they're getting some 80% haircut. The stock has gone up today for the fourth straight session. And if you look at the delivery data, it was as much as 53%, which is telling you there is some bit of cash-based buying which is happening there, but the stock is also in the futures and options space. So clearly for the November and the December futures, there is huge amount of long build-up which has been seen for this counter.
Okay, just before we get in our guest, actually, do we have Ajay Tyagi? Because he should be with us any moment. Okay, we do have Ajay Tyagi. Let's get him in this discussion. Executive Vice President of Equity at UTI Asset Management joins us right now on the show. Good having you, Ajay. Thanks so much for joining in. What are you doing at these levels? Are you deploying fresh money that you may be getting at the current point of time? I'm guessing the answer would be a yes. The bigger question is, where is it that you're deploying money? Because if you look at what's happening in the last few days, it's more a case of musical chairs. A day IT takes center stage, then there is pharma companies for a couple of days. Banks are just not participating. Reliance and to an extent, couple of other heavyweights are holding the index up.
Yeah, so see, we usually take a very long-term view when we make investments into our funds. And what guides us in our investment process is really the investment objective of each specific fund. And therefore, congruous to that investment strategy, each of the fund manager constructs the portfolio, and it usually doesn't change just on the basis of what's happening, on a here and now basis. So regardless of how the markets have behaved, I think our portfolios have been fairly constant in terms of our outlook, at least in the last couple of months. Nothing has changed from that perspective. Some portfolios would obviously be holding certain contrarian positions like IT and pharma, which haven't done well in the last 2 years, but where we really feel that the valuations are very, very attractive. Certain other portfolios could also be holding stocks like PSU banks, which had been a contraposition till about last month, but are right now pretty much in favor basis the recapitalization.
Okay. Let's look at the indices, Nifty and Bank Nifty as well. Nifty Bank is now down by around 80 points. Nifty is down 33 points. There has been a steep correction over the last few odd minutes actually. Look at NTPC, which is now down around 2%. You have ICICI Bank among heavyweights, which has fallen. ONGC, Bharti Airtel, Infosys, these would be some more key losers on the index actually. L&T is also down by around 1%, and so is ITC. So almost all these heavyweights have corrected over the last few minutes. But look at the correction in Nifty, 10,366, very close to the day's low, I would believe, or a new low rather. Yeah, it's a new low, in fact, for Nifty in today's session. If you look at Nifty Bank, which is now down around 70 points. Let's see what does that indicate. So RIL, ICICI, Infosys, ITC, these are the four stocks which are majorly responsible for the decline so far, while HDFC Twins have been supporting and also IndusInd Bank. So interestingly, on the private banking side, you have a lot of support coming in from HDFC and IndusInd, but ICICI actually figures among the key losers. But there is definitely some kind of selling pressure emerging in last few minutes of trade. That may be because of the expiry as well, so we'll keep an eye on that. Ajay, but there's a short-term volatility that we see in the market. It could also be because of expiry. There are a couple of events lined up, like for example the OPEC and non-OPEC countries meeting. We'll come to know about the outcome on Friday. Do you think that could significantly alter the direction of our equity markets?
See, I think very clearly India being a big importer of crude, uh, our current account deficit on a very immediate basis does get impacted if crude prices spike, and it seeps into our inflation. If government is forced to give some bit of subsidies, it seeps into our fiscal deficit, and therefore it vitiates the entire environment. So yes, India has been a beneficiary of, I would say, crude prices remaining benign over the last couple of years. And equally, if crude prices were to spike from here and go north and perhaps cross $70, very clearly it would work to our detriment.
So are you betting on this sector, or rather we could include gas into it, because we have seen a lot of movement in that segment today?
So some of our funds, yes, have been holding a fairly strong position in the entire oil and gas space, and including the city gas distributors. So yes, some of our funds clearly have a overweight position into the sector, and gas in particular, because of the fact that gas really has tailwinds of the government policy behind it, and perhaps it looks like that going forward increasingly on account of pollution, you would see more and more of gas-based rather than coal or pet coke based inputs for the industry.
Ajay, your funds have exposure to realty stocks because we've seen a lot of analysts also, turning bullish and betting on that theme of affordable housing, or rather housing for all by 2022.
So there is no direct exposure to real estate, I think, or to the reality companies, so to speak, the real estate developers, if I were to be specific. But yes, in terms of housing, we are trying to capture that by way of investing into housing finance companies. I think that's a much more cleaner way of taking a ride on the affordable housing space as well as the housing for all space, and the attendant growth that would happen in that subsector. We are really not very sure in terms of quality, corporate governance and the likes for many of the real estate developers.
Okay. What's your view on some of these popular themes of recent days, like, for example, gems and jewelry stocks? You have a lot of interest in textiles, also some of the leather players, and there is expectation that government will probably keep working on some kind of support for these sectors, because they generate a lot of employment. Have you been betting on them?
Not really. See, I think the bedrock of our philosophy has been the fact that businesses should be able to generate reasonably strong cash flows. They should be able to maintain a strong return on capital employed, and that too through the cycle rather than at a particular point in time in the cycle. And from that perspective, the sectors that you just mentioned don't really fit into the overall philosophy. So we could be having an odd name here and there from these sectors, but from a more thematic perspective, I'm afraid they qualitatively don't fit into our longer term philosophy.
What's the view on a couple of the beaten down sectors for the likes of pharma? Do they look attractive to you at current valuations, or you would still stay away from it?
So, I would say that majority of the bad news is already there in the price. And I think if you were to dissect this sector, you would realize that there are basically three pillars on which this sector is built. One is the exports to the US market or the US generics market. The other is India formulations, and the third is the exports to rest of the world, predominantly developing markets like Africa, CIS, even South America. Now, each of these three pillars, so to speak, have had their own near-term challenges in the last 2 years, I would say. US on account of the pricing pressure, also on account of the fact that many companies had US FDA regulations against them in terms of their plants not being up to the GMP requirements, and therefore there was a genuine concern there in terms of whether this will go on over the next foreseeable future, or do we see a final resolution to all of them. Our sense is that we are pretty much nearing the end, if we haven't already seen the end, that is. As far as India formulations are concerned, it's actually a very, very high growth market, and you can really see that the growth would continue to happen over decades just because of the fact that the healthcare penetration is very low. The per capita healthcare spend in India is a paltry $20 per annum. And if you were to just contextualize this, in the US it is about $1,100 per annum. So like the consumer sector, I think even the pharmaceutical sector, the Indian formulations part of the pharmaceutical sector has a long runway. But of course, there were issues related to more drugs being got into the NLEM list and therefore price controls being put on them. This is an event which plays once every 5 years. That's when the big revision into the list happens, and certain drugs see a downward revision in prices. The last part has been, like I said, the export market to the other emerging farm emerging market. Now there the challenge has been currency. So the local currency sales for many companies has been strong, but the fact that rupee has been very, very strong against many emerging market currencies meant that on a rupee basis, their sales have been very, very weak.
Sure.
Our sense is that, unfortunately, the worst has happened all at the same time across all these three legs of growth.
Right.
But we are pretty much close to the bottom.
Well, we certainly hope that is the case. But really appreciate you taking the time out and joining us today, and look forward to have you more often here. Thanks for being with us today.
Thank you.
Well, that's the view from UTI Asset Management on their thoughts on the markets currently and individual betting themes, investing themes as well. A stock that is not usually spoken about from an investment or a trade perspective, but is in focus, is ITDC, because there are reports that suggest that they are seeking to work closely with state-level tourism bodies in order to give a boost to the tourism industry, possibly to the business as well. To talk about this and the impact that it could probably have on the business too, Ravneet Kaur, the CMD at ITDC, joins us right now on the show. Ms. Kaur, good having you. Thanks for joining in. First question, would this working closely to expand tourism and promote and develop tourism business in India be value and revenue accretive for the business of ITDC as well?
Yes. We are looking at it as a way of expanding the business of ITDC and looking at growing our Ashok Tour and Travels, our Ashok Engineering Services, and the Ashok Events divisions. So it is with that objective.
Okay. Can you share some more thoughts here as to what will this entail, and if indeed this venture is successful, what does it do in terms of say growth that comes in for you over the course of the next 24 odd months?
Right. What we are looking at is that we are going to have more closer working relationship with various state tourism corporations and departments. Now, for that purpose, we are already working with them when it comes to the sound and light shows and some work in the tourism infrastructure sector. But our focus is not only to continue to work in those areas, but also to expand it further and take our collaboration into areas like doing tour packages. So we've got some very interesting suggestions where we're looking at tour packages for niche tourism like farm stays in Punjab or eco-tourism in Sikkim and Arunachal Pradesh, tea tourism, homestays in Assam, building packages around festivals like the Hornbill Festival in Nagaland and the Bihu Festival in Assam. So we're having these various ideas which have been thrown up in these interactions, and we are now planning to concretize it and take it further. So that is one area. The other area that we are looking at is event management. So the forthcoming Surajkund Mela in Haryana, we are working very closely with the government of Haryana on this. And then the third area is, of course, skill development, where we're looking at, customized training programs for soft skill development, especially in the unorganized sector. So the state governments are willing to sponsor the people working in the unorganized sector, like taxi drivers, tourist guides, etc., so that, we are able to provide a better experience to the people who go for tourism to various heritage and important places within the country.
You talked about several states and there are possibilities of developing tourism there, but if you could tell us, is it more at the ideation level as of now, or you have at least some firm plans? with a few states to begin with, where we could hear, some action soon enough.
Oh yes, we, as I mentioned earlier, we are working with Government of Haryana for the Suraj Kund Mela, which is coming up in the month of February. Then we are doing the coffee table book for the State Tourism Agency in Punjab. And we are also working very closely with the states on completing the sound and light show projects, which are currently in hand. These are what we are having immediately in front of us.
What you also have been doing is, handing over some of the properties to various states. Is that process still on? Are there some more properties that would go to the states soon?
There are very few left now, but the ITDC owned properties are the ones which are being handed over to the states, where these are on leasehold lands. So those are the properties which are going back to the state governments. Otherwise, for the joint venture companies, we are looking at joint leasing. So like we have the Hotel Puducherry Ashok, or the hotel in Puri, the hotel in Anandpur Sahib. So we're looking at doing the joint leasing through our joint venture companies in those areas. But we are continuing to follow the disinvestment policy of the Government of India.
Ma'am, I was coming to that question. I think the Government of India holds nearly 87% stake in the company. Have you heard anything? Are they looking to cut down their stake? If yes, if you've heard anything, any timeline that you want to share with us?
I'm not aware of any such move to reduce the stake immediately. There, of course, is a policy decision which has been taken by the government for all CPSEs where they have more than 75% shareholding to gradually bring it down. But there is nothing immediately afoot as regards ITDC.
All right. Just to talk about your financials, how's the second half looking for the company? I believe in the second quarter, the operating performance was good, but the company posted a net loss. What kind of growth can one expect in the second half of this fiscal?
Oh, we are growing very well when it comes to operations. So on the operating side, we are having no difficulties. It is only that there is an impact of the pay revision which has come into this quarter. So you are seeing this pay revision which is effective from January 1st, 2017, which is being provided for, and that is how we are having losses on that front. Otherwise, the operations are looking good, and we are having extremely good occupancy levels, especially in the Ashok Hotel in Delhi.
All right, ma'am. We'll leave it at that note. Thanks a lot for joining us and giving us that outlook for ITDC. Well, the stock today has seen, it's under a bit of pressure, but if you look at the stock on YTD basis, I guess it has been giving a good returns. But let's move across and talk about the stock of the day, and that has to be Rallis India. The stock's gained as much as between 7 to 8% in today's session. Well, if you go by the gains that one has seen, it's come after Franklin Templeton Mutual Fund bought 0.9% stake in the company at about 230 rupees, and currently the stock trades around those levels of 242. That's a gain of almost 5%, Neeraj.
Well, yeah, so this continues to do well, or rather, whenever there is some activity of fund side, this continues to do well. If you look at what the stock has done over the last 12 months, it's not really noteworthy. It's probably moved in line or slightly lower than what the Nifty returns have been. The last 3 or 6 odd months, there have hardly been any gains. Could this be the start of something more meaningful? Is the key question. Remember, companies like UPL and some of the others in a similar space have come in and expressed confidence and buoyancy about the quarters ahead. The question is whether Rallis can do so, or whether this will be a day's play. I think that's a question that's best answered over the course of the next 6 odd months. But this is not all. There are a couple of other things that we should talk about. One is, of course, what's happening to the tea pocket, and two is, of course, what's happening to the gas companies as well. Maybe a few minutes earlier than normal, but Pradeep, let's start off with what the charts are saying about Gujarat Gas, and why is it that you've chosen this particular stock today?
So that is because if you look at the movement in MGL or especially IGL, the stock has been moving up without any significant correction. So I would say the risk reward ratio may not be very attractive. It may continue to move up for a few more weeks like it has been. But if you look for a stock in this segment which has consolidated, corrected and is kind of bottoming out, Gujarat Gas could be one such stock. Because if you look at the recent movement, and this is a daily chart that shows you that particularly in this month of November, this stock has remained under pressure. However, over last 1 week or so, 7 to 8 trading sessions, this stock has been in the process of forming a bottom. And if you look at today's movement, where it has given a gap up and is trying to hold on to that gap, the volumes are significantly higher, which kind of tells you that there is significant buying interest that has come in. Now there is a minor resistance at this pink curve that you see. It's actually 50 days moving average, and that is why it got stuck there. But if you look at historically, 50-day DMA has not really been a very significant resistance for this stock. So it may not really hold on to that for very long. In fact, the overall chart formation looks attractive. It's a short-term trading opportunity, I would say, not really a very long-term signal as of now. Interestingly, if you look at the oscillators and its stochastic that you see right at the bottom, it has also kind of bottomed out and already given the signs of a reversal, which means this is an oversold stock in this sector, and therefore the risk reward ratio really looks better than any other stock in this space, Neeraj.
Okay, remember this is just an observation on the charts, not a recommendation really, but we will talk to some of our experts who will join us a bit later on as to whether Gujarat Gas does look good from a trading perspective, as good as it looks on the charts today. So that's something that you need to watch out for. Okay, here's something else. I mean, this is something that we spoke about in the morning, but because tea companies have been on a roll, I just thought I'll bring up this piece again. Firstly, I just want to bring up that Bloomberg chart, which shows the recurrence with which the tea companies have moved up. The last 4 or 5 sessions across the board, we've seen a clutch of these tea companies move up. That's McLeod Russell, Goodrick, Warren Tea. You put up Jayashree Tea also, some very good moves. And now today's moves. So McLeod Russell will come up predominantly because that's been the big mover, but I think a couple of others too have moved well. So let's get the intradays of McLeod Russell, which is up about 6.5%. Maybe Goodrick Group, maybe Warren Tea as well. All of them will not have similar moves, keep that in mind. But Warren Tea or Jayashree Tea or Goodrick, they will be showing gains. Now, reason why this could be happening, one, tea prices have been higher. Overall production lower by about 15 million kgs. Couple that with the fact that consumption is moving up 3-4%, and there's some export that is happening as well. So it's a shortfall of about 40 to 50 million kgs in India alone. Keep in mind there is no scope for import because India is actually exporting this season because of damaged crops in Kenya and the rest of the African countries as well. So the demand supply equation is well known. What this does to finances is the key question. With the current prices being higher by 15-20 rupees, those graphics will come up on your screen. So the current tea prices are higher by 15 to 20 rupees per kg, and companies believe that the opening prices for FY19 could be higher by another 15 to 20 rupees per kg. So this is essentially what's happening to prices. Now I'll just very quickly bring up what McLeod Russell had to tell us when they spoke to us 3 or 4 days back. They said that top line can grow by 10 to 15% in FY18. EBITDA margins, which in FY17 were 5 to 6 odd percent, can go up to 12 to 13%. And if the cycle persists, margins can even get back to the normal mean of 18 to 20 odd percent in a peak cycle. That is an improvement of 3x on the EBITDA margins front, which is very, very strong. Keep in mind the volume growth will be okay. I mean, the volume growth can't really be 40-50% in a commodity company like tea, but if margins move up, then that's substantial. They believed, I think Kamal Bhayati said this on air, that their core EBITDA can be 180 to 200 crores versus 60 in FY18 versus 60 crores in FY17. That's a 3x jump in EBITDA for the current core EBITDA for the current year. Now you can do the math as what it does to the bottom line as well. And a company which is in a midst of a sectoral upcycle, if the cycle lasts, the valuation multiples moving up a bit, the earnings moving up a bit, naturally people are finding some buoyancy within the tea space as well. So good going there. Don't quite know how long it will last. The valuations though mildly in favor even now if you consider the peak earnings that McLaughlin's spoke about. If indeed margins go up to 18-20%, so on and so forth.
You know, a lot of these analysts on the street were also saying maybe the cycle for these tea companies could be turning. If you look at them in the last 3 years, we've not seen any substantial price increase which has come about. Even if there was, that was compensated by a wage hike which all these tea companies had to take. So if the cycle actually turns, because mind you, none of these stocks have done anything if you compare them in the last 5 to 6 years or so. So it's just in the recent past, in the last 2 to 3 sessions, we've had, like Neeraj was mentioning, we spoke to Mr. Baheti of McLeod Russell. We also spoke to the management of Jayashree Tea, who categorically, he actually mentioned that the prices have increased by almost 20 rupees per kg for them. So the average selling price for these companies is somewhere between 190 to almost 210 rupees per kg. But that's about tea companies which are buzzing not today but in the past few sessions. Let's switch focus and talk about the telecom space. The Telecom Regulatory Authority of India has released its recommendations on net neutrality. The regulator has recommended that licensing terms should provide explicit restrictions on any sort of discrimination in internet access based on content being accessed, protocols being used, or user equipment being deployed. Well, the recommendations go on to say service providers should be restricted from entering into any arrangement, agreement, or any contract by whatever name called with any person, natural or legal, that has the effect of the discriminatory treatment. All right, let's go across to Somit Sarkar, who is joining us to find out what all of this exactly means. Somit, take us through it.
So TRI in its recommendation on net neutrality is restricting the service providers from entering into any agreement or any arrangement or contract that has an effect of discriminatory treatment. Now the licensing terms would restrict any sort of discrimination in internet access based on content. A content definition would include all contents, applications, services and any other data. And discriminatory treatment would include any form of discrimination, restriction or interference. Also it would include blocking, degrading, slowing down or granting preferential speed or treatment to any website or such. Now, however, this TRI has kept specialized services and content delivery network out of the ambit of discriminatory services. Now, these specialized services would be identified by the Department of Telecommunications, and content delivery networks, which means service provider providing services on its own app, is also exempted from the scope of restriction and discrimination.
Thanks a lot for all these details, Somit. So now this is a significant development that we'll be getting more opinions on that later on in the day. But moving back to the markets, Ruchit Jain, technical analyst at Angel Broking, is joining us on the show now. Ruchit, significant volatility, in fact, a steep decline in index, both Nifty and Bank Nifty is seen over last half an hour of trade. Have we breached any significant level, or do you think the range or the uptrend remains intact?
Good afternoon, Pradeep. Although in spite of that volatility which we have seen in today's trading session, in fact, we have not yet breached the resistance end of 10,410. If you observe the daily charts in Nifty on last few trading sessions, then probably we have seen a range-bound move, wherein on the lower side 10,300 has become a very strong support. Even in terms of open interest, 10,300 put as the highest amount of open interest, so that's a very strong support base. And on the higher side, a 78.6% retracement of the recent corrective move from 10,500 to 10,100 is placed around 10,410. So 10,410 becomes a very crucial resistance level for the index, which we have seen in last 3 trading sessions. It has attempted but has not been able to breach successfully. So tomorrow being an expiry, we can expect some volatility to coming or a directional move to come in. But the index has to breach or has to break about 10,410 for any kind of positive momentum to come in. So in case if anyone is looking to trade in the index, let the index breach 10,410 on the higher side. Then I think one can look for a buy setup. Otherwise, if first 10,300 is breached, then we may see some sort of good profit booking coming in the markets too.
Ruchit, what are the individual trading ideas you have for us?
One on the buy side and one on the sell side. On the buy side, we have NCC. We have seen that the stock in today's trading session has given an up move with very good volumes. And in fact, not only today, if we see the recent last couple of weeks of data, then quite good buying interest has been seen as the volumes are quite higher. Even on the weekly and the monthly charts, this is indicating a good breakout for medium to long term as well. So from a trading perspective, we are recommending to go long in NCC at current levels, keeping stop loss below 108, and we are expecting target around 132 in about 2 to 3 weeks of time frame. And second pick is a sell call, one in ICICI Bank. The prime reason, although it's an heavyweight, if we see the last few days, firstly, the stock has not been performing in line with the Bank Nifty index. Secondly, on the daily chart, a rising wedge pattern has been formed in the stock and the prices have given a breakdown from that pattern. This rising wedge pattern is usually formed after a significant up move and indicates the end of an uptrend. So we believe a corrective move has to come in ICICI Bank before any kind of a broader uptrend starts in, and the lower end of that rising wedge is placed somewhere around 301. So one can go short in ICICI Bank, keeping stop loss about 320, expecting targets around 301.
Okay, so these are some of the trading ideas. Let's look at some of the key movers in the market over the last half an hour or so. Castrol India has given a upswing of around 1.5%. You also have Piramal Enterprises, which is now up around 3%, has gained roughly 1.5% over the last few minutes. Is quoting at day's high now. PI Industries has also moved up. I think this would be the third day of straight gains for PI Industries, which is now above 900 mark. 920 is the level right now, and you can see it quoting at the day's high once again. Torrent Power is another key mover. Sun Pharma Advance or Spark has also moved up in last few minutes, and so is Eris Life Sciences has gained 3.5% more. It's close to 10% now, quoting at day's high. Eris Life Sciences, as you can see, these are some of the key movers in the market over the last half an hour of trade. Ruchit, if you have seen the chart of Eris Life today, there has been a significant move. Do you think it's an opportunity to enter today, or you would rather wait?
I think the prices have already seen a consolidation phase post listing. We have seen a good corrective move from 715 to about say 520 levels in the month of August. But then a broad consolidation phase was seen, and in last few trading sessions, the prices have given a breakout from this consolidation, which has been also been supported with decent volumes if we compare. And I think if anyone has to enter, then even at current levels, one can look to enter. It's difficult to give any target projections considering the limited historical data, but I can give a stop loss. Today's gap area, according to the gap theory, should now act as a very strong support, which is placed around 655. And as the prices move higher, one can adopt a trailing stop loss method and continue to ride the trend.
Okay. Well, a lot of stocks in the broader markets which have seen good moves. Pull up Bombay Rayon Fashion. This is the counter which has been moving in the last 1 month. It's up over 60%. Locked in upper circuit today, up almost 20%. Besides that, you also have Talbros Automotive, which has risen as much as 16% today. And this counter too has been active in the recent past, now up almost 18%. The other stocks, you've got La Opala, which is up almost 14%. Harrison Malayalam, another tea company, registering gains of almost 16%, and Sangvi Movers, that's also up almost 14%. So clearly from the broader markets, every day you see some of the other stocks doing well. It remains a stock-specific market because the broader markets so far have been outperforming the benchmarks. But on that note, let's also bring in Shrikant Chouhan, Senior Vice President of Technical Research, who's joining us now. Hi, Shrikant, thanks a lot for joining us. Good afternoon to you. What are your top trading strategies at this hour?
Good afternoon. I think, see, the way the Nifty is like yesterday recovered from the lows of 10,340 and it closed very close to its previous high, and this current moves upper end. I'm of the view that now 10,340 is going to act as a very good support for the market in the short term, and based on option data, 10,300 is the area of support. So I think between these 10,340, 10,300, market is having very good support. And in case if we see any decline because of any reason, I think one should look for taking some long position with a price target of close to 10,500 or maybe 600 on the higher side. The reason is because the recovery is very strong. Bank Nifty also participated, and currently the markets are like turning volatile. So it is better to keep a stop loss close to 10,300 And if there is a very short-term view, then 10,340 should be the stop loss area. Bank Nifty also is very close to its support area, and 25,650 is the area of support. So there we would like to keep a stop loss with a price target of close to 26,100 or 200 on the higher side. So basically we are bullish on the market with a tight stop loss at certain level, specific level.
Shrikant, any stock specific ideas?
Stock specific, yes, of course. All these PSU companies are in strong trend, and whenever there is a correction in the market and market starts recovering from lows, we have always seen recovery in all PSU companies. This time also we are of the view that Ingenious India is consolidating around its support area of 183, 184, and from here again it should recover back to the levels of 193, 195. So with a stop loss at 178, if we take long position, then I think Ingenious India should deliver a good return on short-term trading strategy. We also like HDFC Limited, which is trading around some 1730, 1725 levels. There also, if you see, the formation is very strong because the stock has fallen vertically from 1800 to 1680, 1670. From there again the stock is recovering back. So here also we are expecting stock to move to the levels of close to 1780, 1790 in next 1 or 2 days of time, and the stop loss level is very nearby. So with the stop loss at 1710, if we create long position, I think then it should reward short-term traders.
Well, the other stocks which are doing well are Tata Global Beverages. The run-up continues. The stock's up almost 4%. It is seeing some fresh long build-up also coming about when it comes to December futures. Shrikant, Tata Global Beverages trading at its 52-week high. Can it scale higher from current levels?
I think, see, the way price is expanding along with a strong rise in upsurge in volumes, I think the stock is heading for first the next psychological mark of 300, because the stock is into new territory and new a particular price zone. I think psychological levels are going to act as a strong barrier for the stock. So 300 is the next ultimate target for the stock. But the way the stock has gained momentum above the mark of 250, I am of the view that in next few months of time, the stock is heading for minimum 350, 370. But in the short term, in next 1 or 2 days of time, we are of the view that 300 should act as a strong barrier for the stock. From there, some profit taking should come, and it should consolidate between the range of 265 to 295 for next at least couple of days. So 300 is the ideal level to take some profit.
Okay, that's the view on Tata Global. Let's move on. Sachin Shah, fund manager at Emkay Investment Managers, joins us on the show now. Hi Sachin, good afternoon, and thanks a lot for joining us today on Bloomberg Quint Live. What are you doing in the markets at these levels? Are you deploying any sort of fresh cash?
Well, frankly, at this point in time, we are more like a wait and watch. We are very slow in investing at this point in time. We just got done with the earnings season. And, what we are seeing is that if you see the results on a second quarter just basis, of course, the results are quite decent. But if you look at the results on a first half basis, we don't see much of growth overall coming back. So that's been a little bit of a concern, and that's why we are still waiting and watching out. The other thing that we are also observing is that we are seeing that the commodity prices have actually shot up quite a bit in the last few months, and that should have some bit of effect on the manufacturing inflation and probably some bit of pressure on the margins in the next quarter or so. So we would like to actually wait and see and how things play out over there, and then probably take an aggressive call on the markets in the current valuations.
Okay, but do you think there are reasons, or that there are important events or factors that one should really be watching in order to really time this market? Because lots of experts have been talking about a correction at least since July, I would say, but the correction hasn't really come yet.
You are right, absolutely. The markets this time has actually surprised most of the investors who've seen these markets for a longer period of time, and we've not had too much of volatility, which is generally a very inherent nature of the markets. So that volatility has been really missing in these markets for almost 2-3 quarters now. But I guess that's the a very short-term phenomena. Probably we should see some volatility in the next few months. What events will pan out that, or what are the triggers that will create that kind of thing? It's very difficult to preempt that. But the inherent nature of the markets has always mean that they will be volatile in the short to medium term, and that is where you actually get opportunities for long-term investors.
So in the meantime, oil has been moving up, and today if you look at it, it's the gas distribution companies in focus. That's a call actually coming from another domestic brokerage really. But do you also have a positive view on gas companies?
Frankly, at this point in time, we are not investing in that sector, but I agree with you that sector definitely has a very promising outlook as far as the growth is concerned. So that will definitely be on our radar, but again, we are holding back ourselves due to the valuation front.
Which are the pockets, Sachin, that you are studying currently to put some money at a later stage, since you said currently the earnings season has just concluded, you guys are just waiting and watching the markets. Any theme, any pocket which you guys are working on currently which looks attractive at current valuations?
So clearly some of the auto and auto ancillary stocks continue to, we believe that there should be good growth over there for the next few years. So that's one space that we are extremely glued on to, I would say. Over and above that, I think obviously private sector banking and some of the small banking space within the private sector is something what we are also quite positive on. That's the second thing. Third is some of the niche sectors like your logistics, travel and tourism, maybe some bit on the defense side. So these are some of the spaces that we are really glued on to and trying to make our picks over there.
Sachin, I mean, it may not be your team necessarily, but I recently read a note from the house of Emkay about the hospitality sector, stocks like Indian Hotels, etc., in light of this upcoming IPO of Lemon Tree. Now, do you have any thoughts here on the hotels and the hospitality space, and whether there is a money-making opportunity? If so, the rationale?
See, clearly the travel and tourism is a big consumerism kind of a trend that is really playing out in this country for the last few years. And the other thing is, so that's one is the domestic side of the travel, and we've also seen that the inbound travel from the foreign tourist has actually also gone up quite a bit in the last 12 to 18 months. But I think, of course, the bigger story is going to be the domestic travel and tourism industry, which is actually going through the leaps and bounds. So hotel industry as such has to be one of the biggest beneficiaries of that. So if one can actually participate in some of these hotels to bank on this trend of travel and tourism, I think it can actually do very well.
Pull up NCC, that stocks rallied almost 7 to 8% in today's trade. There you go, that's the intraday chart. It's almost trading at its day's high. Let's just get a technical check going. Ruchit, any sort of fresh breakout that you're seeing on NCC? I guess it's also trading at its fresh 52-week high.
Yes, on the weekly, monthly charts, as some time back we already discussed that this is one of the stock which is in our buy list today. And we have recommended it for a target projections of around 132. Clearly, even on the volumes front, the up move has been supported by very good volumes if we compare the recent history. So I think the trend is positive, and it's likely to remain up. And on the higher side, we can expect levels around 132 in very short term.
Shrikant, if you could look at L&T Technology, this stock was actually trading in negative zone around half an hour back, has suddenly given a swing of around 5.5%, and you can look at it a day's high now. What's your call really in short to medium term?
I think it's a very surprising move that we are seeing in LAT Technologies, and it is like continuously gaining, even though there is a very low volumes, but the stock is continuously gaining, and the in between when the stock was close to some 870, 850 kind of area, that time there were like a very good amount of volumes, but right now the volumes are very low, but still the stock is going up. I think the way the formation is there, I can interpret this as a rounding bottom kind of formation and breakout. So if there is a specific breakout, then we should see the levels of 1150, 1160 in next maybe a few weeks of time. So it's a buy, and today the stock has given some price breakout because it was consolidating below the range of 950, 955 since last almost 10 days, and today the stock has broken this level. So broad, if we take a broad view, little longer view, then certainly it's a buy even at current levels, and we can keep a target of 1150.
Sachin, what about the liquor stocks? They've performed really well. The September quarter earnings were good, and if the latest reports are to go by, these companies have taken some sort of price increase after multiple quarters. We've also seen that premiumization theme working well for most of these liquor companies. And if I'm not mistaken, there was one note from Emkay where they were bullish on Radico Khaitan. Anything that you like here? Have you guys put your money in any of the liquor companies?
So we haven't yet invested in that theme at this point in time, but I completely agree with you that the results were very, very good for most of the liquor companies, and the premiumization and the consumerism, the theme seems to be really playing out there quite well. The industry seems to have taken in stride with most of the regulatory hurdles or the resistances that they've had in the last maybe almost 3-4 quarters now, and the industry seems to be absolutely back on track, and the managements are also very, very focused in trying to do the business in the new environment, and with all the regulatory challenges that they have, they've actually overcome that. So I think one definitely believes that this is one thing which will actually play out very beautifully for the next few years now. So that's definitely on our radar.
Okay. So let's move on to the buzzing stock of the day, which is Eris Life Sciences, and Nikki Mirchandani is standing by with more details. Nikki?
The stock has risen as much as 6.4% today, and its highest level since July 2017. Volumes remain moderate at 5 times the 30-day average volumes on exchanges. If you look at the relative strength index of the stock, that at 75%, that at 75 indicates that the stock is currently in overbought trajectory. What's the trigger behind this move? Well, Credit Suisse has initiated a coverage report with an outperform rating for the stock at a target price of roughly 770 rupees, which indicates an upside of nearly 18% from the current level. It says that Eris is a pure play in the Indian pharma market. It has generated a free cash flow, and Eris is also the return best profile in terms and growth in the sector. It says that the return on capital employed at 100% is good as compared to its peers. Also, if you see the profit CAGR from a period of FY17 to 20, that's a percent of nearly 24% is also good enough for the company. And also the turnaround of recent 4 loss-making units for the company also works in the advantage of the company for that matter.
Well, thanks, Nikki, for all these details on Eris Life Sciences. This is one stock which has remained strong through the day. In fact, if you look at the movement, it continues to hold very close to the day's high level, and we have taken a view earlier on this. But there are some more interesting pockets like tea and coffee which have been doing well. Look at Tata Coffee, which is up now 6.5%. We did talk about some of the tea stocks, and they have also been doing quite well in today's trade, whether you look at McLeod or you look at Jayashree Tea. Interestingly, both these companies haven't really announced their results yet, and we'll have to wait for the result till next month. So I think the first week of December or the second week of December is when we'll be hearing from these companies. So then we'll probably get to know the fundamental picture better. But we have been talking to some of these companies, and they continue to sound positive.
12% for this one. Jayashree Tea, McLeod Russell 6% as well. It's big move that has happened in the soft commodity space as well. Actually, just wondering if there is a trade here. Ruchit, I don't know, the stocks have rallied a bit, but can somebody make a fresh investment into a McLeod Russell or a Jayashree Tea?
Frankly, very difficult to give a call because since in last 3-4 trading sessions the prices have already rallied significantly, and even if we take a risk reward ratio with by entering at current levels, they won't be that much favorable. The stop losses would be much larger than the targets which would be seen on the higher side. So I think one needs to wait for some kind of decline now if we want to get a fresh entry. If we talk about the stocks, then 3 stock names that we like are McLeod Russell, Jayashree Tea and Harrison Malayalam. Harrison Malayalam we have also recommended it during last week, and I think at current levels one should not jump into take a fresh entry. Let some cool off come, and if any kind of declines of even 5 to 6% we get, then I think the risk reward ratio would turn favorable.
In fact, this is not really a stock or a sector that fundamental analysts really like. But there are a few things, like if you look at the McLeod Russell, within this 1 month of November, it has recovered its losses for say last 1.5 year, so to say. It kind of peaked in 2016, middle of 2016, and all those losses have been wiped out within a month. Also, there is a kind of pattern where you could see that these stocks typically bottom during the winter, and you have a few good months, 4 to 6 months rally, or sometimes even a year-long rally that we have seen over last 10 years. If you try to analyze the pattern on these stocks, do you think there could be an opportunity this time around as well? Sachin?
Sorry, I completely missed you. Can you come back, please?
Yeah, I was talking about the tea stocks, which don't really probably give you, very strong returns year after year. But there are seasonal trends and there are cycles that can be played. Would you like to play the current cycle?
See, frankly, as a kind of a unstated policy, but we generally don't like to invest in any commodity businesses, and tea definitely falls into that category. So we generally don't track, neither do we invest in this, in commodity stocks.
Sachin, that means you've also not invested in metals which have outperformed this year.
You are absolutely right. So that has been a bit of a miss for us, because this year metals have been one of the biggest outperformers. Not only metals, in fact, a lot of commodities actually have done very, very well this calendar year, and we have not participated in most of it. But we are okay with it, because we believe that if we are investing for 3, 4, 5 year period kind of horizons, we rather be better off with secular kind of businesses which gives us compounders. Whatever it could be, anywhere between 15 to 25% compounding kind of businesses is what we really like to place our bets on.
You would at least like to invest in Tata Global, I guess, Sachin.
So Tata Global definitely is one of the better businesses in terms of the way they manage their brands, and of course now there is also they also have Starbucks, which is also a very, very an upcoming business, I would say, in India. So definitely that is one stock which will be part of our investment universe.
What about the logistics space? That's been in focus post GST implementation, and also recently the government giving it the infrastructure status. Is there anything that you're looking at in this space?
So we already have made a couple of investments in the infrastructure space, and we strongly believe that because of the compliance and because of the new GST rules, there is going to be a big shift from the unorganized logistics players to the organized logistics players. And some of these large logistics players which have the benefit of a very deep and a widespread network along with the technology, and also having one of the very strong control over their costs, are actually going to hugely benefit in the next 2-3 years. So we are very, very positive in this space, and we have already made a couple of investments in this space.
Look at Kolte Patil. In last 15-20 minutes or so, the stock has moved up sharply with volumes. You can see that quoting at day's high now. Sachin, are you positive on the real estate per se, or are you selectively buying into some of those companies which would probably benefit in government incentives in tier 2, tier 3 cities?
Well, again, in real estate, we are very selective about investing, and we have one investment in real estate which is more to do with the commercial real estate, rental yield kind of a play. But I agree with you, Kolte Patel is also a very interesting company. They are one company which have actually delivered in the last 6, 7, 8 years when the markets have had humongous amount of headwinds, and yet they have actually managed their balance sheet quite very prudently, I would say, and they also continuously always look to de-risk their business model all the time. So, and the management has been very disciplined about most of their investments. So that's definitely one of the stocks that we like.
Okay, Sachin, appreciate you taking the time out and joining us. Thanks much for sharing your thoughts today. That's the view from MK. Just before we get into Fab 4, just want to take a couple of chart calls from our technical experts as well. Shrikant, any railway stocks that have stood out for you? I think Titagar, Texmaco, Simco, all three have moved up the last few days. Is there a trade possible here?
I think from that space, if we take Timken in India looks good, which is trading around 856, 855. The stock was below the level of some 835, 700, 790 for almost a year, and after that the stock has given breakout. So from here we are expecting stock to move to the next level of 1000, 1050, so which is a considerable jump from current levels and appreciation from current levels. So it's a great buy at these levels with a stop loss of $50 from current levels. We also like TWL, Titagar Wagon, which is trading around 184, 185 kind of levels, and there also this time the stock entered into 52-week highs. The all-time high is very close by, which is around 185, 186 level. It's a rounding bottom as well as cup with handle kind of formation. So if we go through with all this railway infra related companies, then I'm of the view that they are going to give us tremendous return, terrible returns in next maybe a few months of time. So it's a great investment for any investor to buy even at current levels, more on dims. Technically they are showing a lot of strain, as well as the news flow is also there. So it's a best combination to buy even at current levels. So we like Timken as well as TWL.
By the way, keep in mind, Simco is the other one, which will move in tandem with Titagar, the scheme of arrangement out there, if I'm not wrong. So you will see Titagar moving up and you will see Simco moving up in the same vein. Both the charts should come up on your screen incidentally together. Simco is the stock that I'm talking about. This one too is up about 1.5%. They would tend to move in tandem. So just keep this at the back of your mind. Just want to mark one more stock which is just zoomed up in trade, Kolte Patel. They've taken a bit of a pause the last couple of sessions. I think in today's trade, just a sharp uptick there, 366 or 367 and counting in Kolte Patel. So along with Texmaco Rail, which has also had a really big blast of a move. No, not Texmaco Infra, Texmaco Rail, which is at 127. If we can pull that stock up, look at that blast, and then look at Kolte Patel, which is just suddenly shot up in trade. Ruchit, very quickly, Kolte Patel, what will you do here?
I think within the mid-cap realty space, this has been one of the outperformers in the recent past. And if I see the long-term charts, the monthly charts, then a cup and handle pattern breakout has already been seen during last month. Another target projections according to that pattern is coming somewhere around 427, which is decent upside even from current levels. I think even at current levels, I would recommend to buy this stock for targets around 427 with stop loss below 330.
Okay, let's go across to Yash now. We've discussed a lot of fabulous stocks. Maybe we've stolen some of the thunder, Yash, out of your list, but if you can tell us which are the Fab 4 stocks according to you today.
Well, nevertheless, Neeraj, good afternoon. So first up, we've got Talbros Automotive. Now the stock has surged close to 19% today to hit a record high.
All your stocks are looking like 20 microns, so we'll need to change this for a bit. You need to hang on for a moment while we just fix that, because certainly Yash was not speaking about 20 microns. He was talking about Talbros Automotive Systems, and that stock has had a big move in the session today. So good going really for Talbros Automotive Systems. Ravneet, and there's some brokerage note, I think, Ventura Securities, which led to this move, if I'm not wrong.
Yep, and that's the reason why. And not only today, Neeraj, it's been going up for the last few trading sessions, so that's had a good move. But just pull up Reliance Naval, that's dropped almost 6 to 7%. If you could just pull up that stock. Remember, it's an F&O security, down almost 8%. I guess all the Anil Ambani group stocks have seen some bit of pressure once again. Pull up Reliance Communication, that's down 4%. Reliance Capital, Reliance Nippon, all of them have seen a bit of pressure. Even Reliance Power is trading with cuts. Reliance Infrastructure too has seen mild bit of cuts in today's session. But it's Reliance Naval, I guess, which has seen maximum pressure, down almost 8%. But let's go back to Yash Upadhyay, who's there with us with his original list of Fab 4 stocks. Yash, take it away.
Exactly, Navneet. So as I was saying, we have, first up, we have Talbros Automotive, and the stock has surged close to 19% today to hit a fresh record high of 298.50 on the NSE today after Ventura Securities initiated coverage on the stock. Now, the brokerage firm has assigned a buy rating to it and has also set a target price of rupees 353, which indicates a potential gain of more than 40% from its previous day's close. So do watch out for this one. VIP Securities, in fact, is an interesting one on our list today. It is gaining for a second straight day and has surged more than 21% since last Tuesday. So good news for VIP Industries as well. McLeod Russell is also on our list. The stock is up close to 7%, tracking the increase in tea prices along with the other tea stocks also buzzing in trade today. In fact, the stock has gained close to 13% in this week itself, which is just yesterday and today. So big moves coming in from McLeod Russell. And lastly, we have Sadbhav Infra. Now, this one had surged close to 7.5% today and is sitting at gains of around 3.5% after 30 lakh shares, or close to 0.9% of the total equity exchanged hands via multiple block deals today.
Okay, Yash, thanks a lot for bringing the Fab 4 stocks of the day. But pull up Biocon. That's been holding pretty strong today. That counter is up almost 4.5%, very close to its day's high. Ruchit, on the charts, Biocon at 433. Should one initiate any sort of fresh long here or should cover their longs?
I think if long positions are there, then one should definitely hold on to this, because the high top, high bottom structure has been seen on the daily charts. And also post a corrective move or a sideways movement of last about 5 to 6 trading sessions, the prices seem to have resumed its uptrend again. So even if anyone wants to initiate a fresh long, then at current levels one can initiate keeping stop loss below 412 levels. And on the higher side, I think the stock has the potential to go around 455 to 460 range in next 1 week's time frame.
And VIP is the other one which featured in Yash's list, the stock which so far we've not spoken about. Shrikant, VIP on the charts, how does it look?
I think, see, this one is also like showing a lot of strength, and this particular stock was also into cup with handle kind of formation, which is a bullish formation, bullish consolidation formation, and the stock has given breakout at 205. So if we go through with the formation, then 400 should be the next target to watch out for. Stock is currently trading at 373. I think 400, around 400, profit taking should come. But the way the stock moved up from 160 to 400, I think, yes, after taking profit at 400, if there is any correction, then around close to 350 or 340, certainly one should again look for re-entering into it, because the way the volume, the way the formation is there and the way the volumes are there, I think this stock is going to do miracle in next maybe couple of months. So if we take a view of next 8 to 12 months, then I think this stock is definitely going to do extremely well. But currently around 400, the stock is completing its first level of target.
Avinash Gorakshakar is joining us in the studio. Avinash, VIP, is there a fundamental rationale behind the move?
I think clearly, I think VIP Industries is looked upon as a consumption theme, and I think a lot of these consumption themes have gone up. In fact, the company has shown a decent amount of earnings growth in the Q2, and they are looking forward that the third and the fourth quarter should also be equally good. despite the fact that there has been some disruption due to DST. But I think, Pradeep, overall, this stock has been a favorite of most of the retail and the HNI community. And most importantly, the markets are looking at, now they are entering women's bag segment, which is a very big segment. So, that is yet to actually, get accrued into top line. So, I think the markets are probably looking at some sort of incremental revenue coming in probably in FY19, and which would be a good leg up for a kind of earnings growth. So, I think overall, the consumption theme seems to be very good. This market is going to be a much bigger market than the domestic luggage market, and clearly VIP, the kind of brand it commands, I would not be surprised that once it takes off, you'll probably see a lot of unorganized players actually getting back on the organized kind of bandwagon, and VIP definitely should do very well here.
Avinash, do you track Talbros Automotive? That's the counter which has been in focus, and today Ventura came out with its report. I was just reading, they're saying that there are some export orders which have come in from the new clients for its forgings business, and they're expecting a CAGR of almost 14% from 328 in FY17 to almost 487 in FY20. This is a company we don't talk about every day. If you could tell us, if you track this company, what exactly does it do?
No, actually, it's into automobile gaskets, Ravneet, and I think clearly in terms of the OEM kind of customers, they do have large OEM customers, in fact, some MNC customers and even export names. Overall, I think, the stock has been in limelight because it's one of those small cap stocks with a market cap of roughly about 300-350 crores and below the top line for FY17. So in that terms, the business was definitely clearly undervalued. And in terms of the operational improvement last year as well as in the last 6 months, I think they have done pretty well. So clearly, I think this is not a stock which most institutional investors would get in. But yes, I mean, the kind of appetite you see for mid caps nowadays, I think, the stock has actually attracted a lot of fancy, and probably if the earnings trajectory continues, you could see probably a level of say around, 300 odd rupees, because clearly, I think at that level, I think, there could be a lot of, profit booking, because today itself the stock has moved up by about 20 odd %.
What about Tata Global Beverages?
I think it's been a great performer, Neeraj, for the last 5 months, and I think and I think even at these levels, I think once upon a time, I remember this stock was a clear non-performer. It used to not move up, but the day Mr. Chandra took over, and we started hearing a lot of news whether these companies within the Tata Group would get restructured. I think a lot of value is there in the brands, and a lot of marquee HNI investors have now come in. So I think the markets are now waiting probably, when there could be a lot of money probably being made in this company, when probably these brands could be, value could be unlocked, because that is where the real opportunity is there.
What are you talking about? You're talking about the Starbucks JV or?
The Starbucks JV, yes, and they've got a lot of brands which they sell in the American markets, the coffee brands.
Yeah.
So probably that value is not getting.
But that's not growing, Avinash. I mean, frankly, if you look at growth, that is there in maybe India and the EMs, right?
No, it is. But I think, ultimately, branded business clearly, would command a premium. And as you said, Starbucks has actually taken off in a very big way. In fact, I just saw today that on Yamuna Express Highway, there is a Starbucks which has come up. So, that is something which is very surprising. So clearly, I think markets are growing. Indian markets, as you rightly said, have a great appetite. In fact, the day they announced, some concessional offer, 100 rupee cup for a Starbucks coffee, I remember there was a very big line for that kind of offer. So, I think they have a winning product. And if this restructuring does happen, Neeraj, you're going to see a further re-rating, because the stock has moved up from, 130, 140 odd levels to 270. But yet, I think it looks pretty attractive if one takes at least a two-year kind of plus view.
Okay. Let's wait and watch. But it's 3:10, so let's take stock of what could be happening in the derivatives market in tomorrow's session based on the cues that we're getting today. There's a line that Pradeep uses, right? Book tomorrow's profits today. Something like that.
No, is it that, Pradeep, or something else?
So you can do that if possible. I'll definitely book in terms of initiating a trade. That would be a winning trade for tomorrow.
Okay, that way. No, but Ravneet tells us if there are some stocks that would enter the F&O ban or get out of the ban, and therefore you can book tomorrow's profits today. I will not.
You could have done that in TV18 and DLF. I did highlight, though TV18 only entered into the ban. But nevertheless, it's the expiry week, so you may not see a lot of stocks going into the F&O ban till at least Thursday. I just got one stock, IFCI, which is very, very close, just at the borderline. 94.7% is the overall open interest as a percentage of MWPL. Remember, for a stock to enter into the F&O F&O band. It needs to breach the 95% mark. And today's data indicates that there has been some bit of addition on the future side of IFCI, but whole host of stocks which may come out. Let me just take you through these names. And these are the stocks which have been in the ban period for a really long time. Jain Irrigation, Infibeam, Jet Airways, Jaiprakash Associates, HTIL, Fortis Healthcare, as well as Justal. The reason I'm highlighting these stocks because for a stock to breach, to come out of the F&O ban, it has to breach the 80% mark, and all the stocks I've just highlighted, the open interest is between that mark of 80 to almost 84%.
Okay, and what's the result of, I mean, what's happened to TV18 and DLF? Sorry, I missed out on both those stocks today, but has there been any kind of price movement?
TV18 has seen a bit of profit booking. Yes, it's down 2%. It's entered into the F&O ban. Remember, day before yesterday was the day when the rally began.
Yeah.
And that day when I checked the futures data, the rally was largely on back of short covering. And it's after, I don't know, multiple months or what, the stock closed above the mark of 15. That's when a lot of these technical analysts, they turned bullish. Yesterday, the stock rallied almost 9%. There was huge amount of build-up which was seen. So it did enter into the ban period today. And now considering it is the expiry, probably you'll have traders who would be booking their positions ahead of the expiry.
I remember there was a buy call on TV18 yesterday to which we said, hey, be careful, it could enter into the F&O ban. There's a bit of a pullback that's happened in this counter today. But it's 3:15, 3:14 really, but 3:15, almost that time of the show. When we take a look at what dealing rooms could be recommending in the session today, Yatin Mota is absconding, but we have Darshan, and that's more than enough. Darshan, what are your dealing room sources telling you about trade today?
Yeah, so Neeraj, one of the counters which dealers are talking about is United Spirits has come from the lows of the day. It's trading at near day's high. So United Spirits dealers indicate a large FII fund is actively accumulating, both United Spirits and United Breweries. So there seems to be a lot of traction in some of these alcohol stocks. The next one is Bajaj Finserv. It's up almost 2%. There is a buzz of a possible corporate announcement that could come in. Multiple papers have reported, the deal with Alliance and Alliance wanting to exit. So there could be something on that line as far as Bajaj Finserv is concerned. And finally, Fortis Healthcare, which is down in trade today because it's in the F&O ban, no doubt. But in the cash market, some of the Mumbai-based marquee HNIs over the past few days are actively accumulating Fortis Healthcare. Don't know why still the court decisions is pending, but probably they know something that we don't know.
Wow. Okay. Darshan, many thanks for that. I remember a few days back too, United Spirits was in the thick of action amongst dealing rooms, Darshan, if I'm not wrong.
Yeah, it is. It is. Just, I think over the past few days, these alcohol stocks have seen a lot of traction. Look at stocks like, Radico Khaitan. It's just moved one way from being a 100 rupee stock. It moved up, and then post demonetization, everything got smashed. But then from that, the pullback has been substantial. So GM Breweries came out with a fantastic set of numbers. So the results, actually, the price movement is also indicated because the results were very good for most of the alcohol stocks this time around.
Thanks a lot for that, Darshan. Actually, the chart to look at Radico Khaitan is not today's chart. You actually need to bring up the 1 month chart of Radico Khaitan. And that's when you'll see, I think, what Darshan was trying to say. The move that Radico Khaitan has had in the last 15 odd sessions has been astounding. 28%, but the large portion of that move has happened in about 10 or 15 odd sessions, 284 and counting. Let's wait and see if there is more in store. Could there be more in store, Shrikant? Big rally, then a bit of a pullback. What do you do with Radico Khaitan?
Neeraj, it's a multi-year breakout, and the way the stock has broken, it's a falling trend line. I mean to say the supply line at 140. After that, if you go through with the monthly chart, then the stock has not at all stopped. Like it has gained at each level, and finally now the stock is very close to its 300 level. So almost it doubles in just 3 to 4 months of time. So it shows that there is a great amount of interest in the stock, and maybe because of this, if there is any correction, then again the buying will emerge in the stock. So currently, yeah, the stock is very close to its resistance area of 300. Again, if there is any correction, certainly one should look for adding the stock because it's a multi-year breakout, and the multi-year breakout is at 210, 215 kind of levels. So we are expecting minimum 2 to 3 times in next few months of time. So the next level to watch out for is close to 600, 650 on the higher side, and on immediate basis 300 is the level to watch out for. There, like some profit taking is not ruled out. And on the downside, 270, 265, 260 is the area of support. So it's a buy even at current levels if there is a medium to long term view.
Any thoughts here, Avinash, and any numbers that you would want to share with respect to Radico?
No, I think, Neeraj, the numbers which came out for quarter 2 were quite pleasant. In fact, in terms of both volume as well as margin expansion. In fact, that was why the markets were quite happy to know that EBITDA margin has actually improved. And in fact, this was after the GST, effect came in, and most importantly, after the highway effect, banning liquor on highways. So I would believe that yes, they have a very strong branded portfolio. Almost 40 to 45% of their business comes from these premium brands, and there has been a lot of talk in the market regarding a strategic investor coming in from a long time. I think the management is also serious in getting in some foreign brand as well as a foreign partner. So probably that is also one reason why the stock has moved up. My sense is I think probably some news flow could come in there, but from a fundamental perspective, I would assume that FY18 and FY19. If one looks at the kind of consumption theme, this is one of those stocks which people prefer to actually look at after United Spirits, because United Spirits has obviously become a 4-figure stock. So clearly this is yet got a lot of way to go, and I think in terms of a portfolio kind of choice, this would definitely give a good risk reward say over the next couple of years.
Okay, so you're positive on Radico Khaitan. Have you also looked at some of these railway related companies, Texmaco Rail or Titagarh Wagon? They have been buzzing. Texmaco is up 11-12% in today's trade actually.
Yeah, I think Texmaco, for that reason, Titagarh Wagon could be interesting, because they have a railway and a defense business, Pradeep. And I think the management is very hopeful that, the wagon order intake in the coming budget could actually get a very strong kind of boost. And they have a large capacity. So wagon, business was not very strong in the last, say, 12-15 months. So that probably could be a big lever, in the coming railway budget. So to that extent, Titagarh Wagon looks more positive. The stock has actually caught fancy of a lot of players. But if you look at the earnings perspective, I think Titagarh Wagon definitely looks better.
Okay, 3:20. Let's get in closing strategies from our experts. Ruchit, to you first. One top closing strategy from your end, a BTST or an STBT?
I'll go for a BTST name since we have been also talking about these liquor names, and that's where the momentum has been seen from since last half an hour. United Breweries, I would recommend to go for a BTST. We have seen after today's opening tick, the stock has been recovering very smartly, and also the volumes are increasing now. So keeping a stop loss below 1000 and 1098, I would recommend going long in UBL, keep up for target around 1160 to 1170 in tomorrow's trading session.
What about you, Shrikant?
For me, I think again, if we focus more on consumer discretionary stocks, then Pidilite looks really good. It's a FMCG stock also. Currently, it is trading at 850, 852, and the stock is very close to its previous high of 865. The stock has delivered good numbers, but at the same time, this time the recovery is quite encouraging, and it is indicating us that it is heading for some new heights. On short-term basis also, the stop loss is very nearby. So with a stop loss at 840, if we take a BTST call on Pidilite, then I think it should reward. And the target to watch out for is 870, 875, maybe next, or maybe by tomorrow morning.
Okay, so that's the trading call coming here. We talked about Kolte Patil developers a little while back. Now let's look at Ajmera Realty. The stock has given a 6% upswing. Also look at Parshvanath Developers. This stock has also moved up significantly. All these stocks were actually in red. In fact, Parshvanath fell and then recovered. So Ajmera is really a big winner. You also look at Hubtown and several other these smaller or rather mid-cap real estate stocks have been buzzing, especially in the last hour of trade today. Avinash, is there anything that you like in this space?
I think within noticeable names, Kolte Patil, Pradeep, seems to be a good choice because, they were large players in the Pune market, and now they have started making inroads in the Mumbai and the Bangalore markets. In fact, in Mumbai, some of their properties are now going to get monetized in the year FY19. In fact, that is going to be a near-term trigger for Kolte Patil. And in terms of the kind of project execution which this company has been making, I think they enjoy a very decent record, and most importantly, debt on the balance sheet is manageable. So I think Kolte Patil definitely would be an interesting choice within the smaller real estate players.
Avinash, do you track Bombay Rayon? This is a counter which has been very active in last 1 month. It's up almost 60%. It's locked in upper circuit today. Anything that's brewing here, you track this?
No, I think, Navneet, I don't have an earnings view, but I believe this was a textile company. And I think it's become a sick case with some of the banks. In fact, the banks have given them a lot of concessions. I would believe that they do have a reasonably good branded presence, but I think in terms of the debt on the balance sheet, the balance sheet is still pretty heavily stretched. So I think probably some news flow on any asset sell-off or maybe some restructuring on the loans could be reasons, because this has always been a trader's favorite.
Okay, and what about La Opala? I'm sure investors who would have put money in this counter, be it 5 years back or 6-7 years back, they would have made good returns. La Opala, that's also searched in today's session. I think they make glass or something. Yeah,
they make cutlery.
Okay.
I think again a niche player, Navneet, and I think the margins in this business are very, very attractive. In fact, the size of the business or the balance sheet or the revenue may not be very great, but the kind of positioning these guys have made and the kind of branding they have made, I think clearly they are targeting the upper end and the middle and the premium segment. So to that extent, yes, it's a classic mid-cap kind of story, and which is still showing a very strong earnings trajectory. So I would believe that yes, these are sort of companies which would obviously continue to grow, maybe not in terms of balance sheet, but in terms of the earnings.
That's really interesting. If you look at Sensex or Nifty, we are probably going to end the session close to the day's low. But there are several small cap names that some of them Navneet was just mentioning. You could also look at some more stocks like Astra Micro. You can look at some of the smaller stocks like Genus Power, which has moved up by around 5%. You can look at logistics. Gati and Snowman both have given a swing of at least 3 to 4% in last hour of trade. So there is a broad-based buying happening actually in the small cap space, while the index is not really doing much. Now, does that really give you a confidence, Avinash, or you'll be worried that the action is only in the smaller stocks?
I think the names which you took were some of the logistic names, Pradeep. I think the markets are probably looking at one of the bigger IPOs which is going to come in on 6th December, that is Future Supply Logistics, and I think that could possibly be a near-term trigger for these stocks, especially considering the fact that this is going to come and give an exit to the existing PE investors. So I would believe that yes, logistics as a space has been beaten down very badly, and I think although earnings may not come in FY18, looking at a slightly medium-term angle, I think logistics can be an interesting space, because I think now the industry has got an infrastructure sector status. So to that extent, funding and new strategic investors coming in this sector and companies is definitely something which could obviously benefit the existing players.
Okay, some final thoughts from our experts before we start wrapping up the markets. Actually, just want to see one pocket of strength in the session today, frankly, aside of course what's happened to tea and coffee, and I think Navneet has been marking some of these other names. I just come back to what's happening to real estate. Look at Kolte Patil now, and that one is up 14% if I'm not wrong in the session today, 389. Look at that big building, that tower that just got built in the last 15-20 minutes of trade. Big move there. I don't know if the others are following suit. So the Marathon, NextGens and the HDIL should come up on a screen as well, because HDIL, the promoters are going to issue warrants to themselves. Not so much for Marathon. HDIL in fact in the red. So it's all about Kolte Patil in the session today. Big move there. And the other one is Sonata Software, which at 238 is a really big mover, because it started this rally all the way from 150 about 2 months ago. It was at 150 or 155 or 2 months ago. Sonata Software is now at 238, so that's a big mover as well. Quick thoughts here. Okay, maybe Shrikant, is there a trade in Sonata Software?
See, Sonata Software, if we take a positional call, then certainly it should reward, because the stock was close to some breakout level of 200, 205 since last few months. Finally, the stock has broken this level, and this time we are seeing good amount of activity and rally in all mid-caps, IT stock especially. This particular stock is doing extremely well. Volumes are like above average, and the overall monthly formation is suggesting us that the stock is heading for 290-300, which was its previous all-time highest level. So even at this price, if there is any long position, if there is any investment, then certainly one should hold on to it. And if there is a fresh investment view, then even at this level one can look for adding this stock, because there are very few stocks which are available to invest and hold for next few months of time.
Okay. Gentlemen, stay on. Let's start wrapping up the markets and hand it over to Pradeep now to start off with the large caps and the indices per se. Pradeep, though disappointing a day in the close in the red.
Yeah, if you're looking at Nifty and Sensex or Nifty Bank, definitely it's disappointing. But if you look at the movement today, yesterday Nifty moved in a range of 70 points. Today, I think it's barely a range of 40-45 points so far. But, yesterday we recovered from the lows. That hasn't really happened today. Nifty Bank also down 60 points. If you look at mid-cap and small-cap, though, the picture is a bit better. Although the mid-cap index is flat, the small-cap index is up by 0.25%. But in fact, if you look at the components, there are so many stocks in mid-cap and small-cap that have moved up. So indices, in a way, are not really giving you the right picture. But let's look at, so far as the index, that is Nifty, is concerned, which are the key movers in today's trade. On the positive side, you had the HDFC and HDFC Bank twins, also Axis Bank supporting a bit, but Maruti appeared to be the top gainer. Coal India, Hero Moto, Bajaj Auto, these are some of the other winners. So auto and select banking counters have been really supporting in trade today. On the negative side, we had heavyweight RIL down by almost 1% or 0.75%, ITC, SBI also there. But the key losers would include ICICI Bank, and I'll mention that because it's significant. It has significant weightage. Infosys, which is down by around 1.5%. We talked about it yesterday. It's facing a stiff resistance. And we also had NTPC and Bharti among key losers. Interestingly, Tata Motors DVR is one that appears here, which is also among losers, while most auto stocks were doing well.
Well, clearly from the broader markets, you had some themes which played out today as well. And one of them, which has been playing out for the last 2 to 3 sessions, is the tea companies. Have a look at Harrison Malayalam, a less spoken tea company, which was up in today's session, actually locked in upper circuit towards the end of the session, up almost 20%. Besides that, you also had Jayashree Tea, which rose as much as 13% in today's trade. Well, you had stocks like La Opala, which surged just in the second half of the session, a glassware company registering gains of closer to 12% in today's trade. Talbros Automotive has been active in the last few sessions, and today you had Ventura initiating coverage on this counter, so that was also up nearly 18 to 19%. And Sangvi Movers is the other stock which rose in the second half of the session. That too registered good gains coming about in today's trade. And the railway stocks, we've been talking about that in the last 4 to 5 sessions. Texmaco Rail was doing pretty well. Besides that, stocks like NCC, which is also in the F&O space, that was one of the top. F&O Security, which did well. Bombay Rayon was locked in upper circuit, which with gains of almost 20%. VIP registered fresh 52-week high. Almost 6 to 7% gains were seen on VIP Industries. Adani Group stocks for the likes of Reliance Naval, which is an F&O Security, fell as much as 8%. Reliance Communication is the other counter, which continues to be under pressure. And lastly, Zuari Global. This is the stock which has been locked in upper circuit for last 2 sessions. Finally, you saw a bit of profit booking coming about. The stock fell and closed almost at day's low, Neeraj.
Okay, so let's bring up the contributors in the session today, and let's see if indeed some of the heavyweights are pulling the index down. Remember, at the start of the show, I mentioned about how these 4 heavyweights could be the principal contributors. Not really rocket science, but Infosys, Reliance, ICICI Bank and ITC amongst the top losers, top contributors. I think the HDFC twins, yes, at top of the pile. Some gains by IndusInd Bank, but Bank Nifty by and large has failed to make any kind of a move yesterday. Viewers would remember that yesterday it was the late spurt in the Nifty Bank which led to a big up move in the index as well. It's not the same case in today's session. The heat map will show you that it's even Stevens, or maybe just a slight advantage to red, but it disguises the fact that the heavyweight component, which is the banks, have not participated. Let's get the heat map on the screen, and then the market breadth as well will come up on your screen. Right there, it's seeming like it's even Stevens, but banks are not participating, and there are some heavyweights like Infosys, as I mentioned, which have cracked in the session today. ICICI Bank amongst the principal culprits as well. Um, um, the market breadth remained positive today. So as Pradeep was highlighting, as Ravneet was highlighting as well, a clutch of names which are doing very, very well. The market breadth remained positive for most part of the trading day. Maybe during the latter half of trade, it did come off. Actually, it's a surprise. At 2 p.m., it was well and truly in favor of the advances. Maybe the last few minutes we did come off, which I didn't quite mark. But overall, the market breadth has not been a problem the last few days. It's been the performance of heavyweight stocks in the banking space, which is not moved up, which is not leading to the index moving up either. 2 days to expiry. Let's wait and watch what happens. Lastly, a question to our experts and Avinash. Actually, let me first take in our technical experts, then we'll take final thoughts from Avinash, Gorakshakar as well. Shrikant, what levels are you watching out for until the expiry on either the Nifty Bank or the Nifty?
I think for Nifty, 10,300 is going to act as a very good support because a lot of open interest is standing over there, and 10,400 is the strike price where a lot of call writers are there. So I think between these only we are expecting expiry to come. But the way the formation is there and the way yesterday there was recovery and today the fall was there, I think the market is like just spending a time and it will close very close to the upper band of 10,400. That's the view because Bank Nifty is also doing well and Bank Nifty is specifically into breakout mode. There we are expecting 26,200 is the level to watch out for maybe by the end of this month or expiry.
Ruchit, what about you? How would you be approaching the index tomorrow?
Probably, I think in tomorrow's trading session, we may also see same range bound trading happening. 10,300, as Shrikant also maintained, is a very crucial support technically as well as on the derivatives front. It is the strike with the highest open interest in puts, and on the higher side 10,410, which is the 78.6% retracement of the recent corrective move, and where the markets have been also taking resistance. So I think for index to trade in the index, whether it's before expiry or after expiry, if it gives a breakout either above 10,410 or below 10,300, then only one has to take a directional bet.
There are lots of themes to choose from if you look at the mid cap and small cap. Which stocks will you be really looking at tomorrow or going forward?
No, I think in the near term, these construction companies, EPC companies, specifically, names like NCC, Sadbhav Infra, I think, Pradeep, there is a lot of appetite for these players, and I think the kind of traction we are witnessing on the ground, I think makes us feel that working capital cost has come down, order book inflows have started. So probably, FY18, the second half should be much better for these companies, and I think a lot of companies actually suffered a lot in FY17 due to working capital, pangs. But coming to FY19, I would believe that players like Sadbhav Infra, which is still showing a little bit of uptick, I would believe that in terms of their order book visibility, in terms of their margins, I would believe that these would be some of the themes which possibly the retail as well as the institutional investors would actually look at seriously, because these have been battered down very badly, and probably further risk reward upside could come in, say, over the next 6-12 months.
Okay, gentlemen, thank you so much, all of you, for joining in today and giving us your thoughts and your perspectives. Appreciate you taking the time out. Let's slip into a quick break. Up next, we tell you all that you missed out in the session today in terms of stocks and specific movers, and get you some top stories as well.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
business people.
Welcome back. You're still watching Countdown with us on Bloomberg Quint Live. Well, it was a little bit of a volatile session, so to say, because we started the day in the red. A bit of recovery seen in the intraday session, but we closed almost at day's low. Nifty gyrated as much as 50 to 55 points. The low for the day was at about 10,355. Well, the Bank Nifty was also in the red, but I think that closed off day's low. Bank Nifty closed around levels of 25,846. However, still closing the day in the red. The volatility surged in the last hour of trade. If you could just pull up the India VIX, it was up almost 1%, so closing the day very close to its day's high. In terms of sectors, you had the Nifty Media Index today, which outperformed. In fact, a couple of constituents there, TV Today, Den Network, Z Entertainment, Eros Media, all these stocks ended the day in the green. Let's also check the advanced decline ratio, because the broader markets have been outperforming the benchmark indices in the past few days. So 7:8. Today it was in favor of the declines, but throughout the day the advances were leading. But towards the end, in the last half an hour, you saw that selling pressure coming about. 7:8 was the advanced decline ratio if you go by the NSE stats. Let's also look at the Nifty contributors list, which will tell you which were the stocks which capped the moves on Nifty. Let me go across to the gainers first. Your heavyweights, HDFC Bank, which hold almost 15% weightage on Nifty, were trading in the green and contributed nearly 10 points. Maruti Suzuki, IndusInd Bank were a couple of other gainers. What dragged the index lower were the likes of Infosys, Reliance Industries, ICICI Bank, as well as ITC. And in terms of themes which played out today was once again the tea stocks which were up and about. So look at stocks like McLeod Russell, Jayashree Tea, Rossell India, Goodrick Group, Harrison Malayalam, all of them registered strong gains. Clearly, looks like the realizations for these companies in the coming quarters will be better than before, as both the managements of McLeod Russell as well as Jayashree Tea have indicated that the prices will be higher by almost 20 rupees per kg, Neeraj.
Okay, that's of course what happened to the market today. But let's take a look at some market voices that spoke to us earlier on. Nilesh Shah of Envision Capital had a chat with us. Hear out a small slice of that conversation.
This 5-7% correction, if it were to happen, I think it would kind of be a bit healthy. I think that would set the stage for, again, a decent up move in 2018 as well.
You would presume valuations demand this correction as well?
One is valuations, and I think it will leave some cushion. So, for example, we are pretty optimistic on earnings growth going forward. Earnings growth have been, in a way, elusive to Indian equities. I mean, we've seen earnings growth of between 5 to 8% for many, many years. It's been a single-digit earnings growth era, so to say. But we believe that with the start of 2018, we believe earnings growth will get into double digits. It may not be the high teens, but it could still be the low teens, or the lower end of double digit kind of earnings growth. So we believe that's the probability of that is very, very high. And I think if that, along with a bit of a correction in the marketplace, I think could set the stage for 2018 again to be a fantastic year for equities. We still believe that sectors to do connected with infrastructure, so sectors like engineering, cement, these are going to be the big opportunities. I don't think we can remain growing at 6% at the GDP level for too long. India will get onto a path of 7 to 8% growth rate. If that happens, we believe core sectors will do well. We believe areas like public investment in infrastructure, private capex, housing, these are some of the sectors which we believe will start picking up in a significant manner going forward. And if that were to be the case, then a lot of subsectors like cement, some of the fast-moving industrial consumables, these are some of the areas which will start to do well. Apart from that, of course, engineering and services will also do relatively well. So we think some of these kind of sectors will do reasonably well.
Okay, let's switch focus and talk about the European markets. Let's just bring up the key indices of that region and see how that's faring today. FTSE, CAC, DAX, all these three indices are trading in the positive territory. Let's go across to Sandra Kiloff, who joins us from the London studio with all the details about what's moving the markets higher there. Hi, Sandra.
Hi, as you were saying, stocks in Europe very much advancing today. We're seeing the energy companies taking the lead. This is after a bullish outlook from one of the sector's bellwethers, the Stock 600, the DAX jumping 0.3%, while the FTSE 100 is up 0.4% at the moment. Now, this all comes as Royal Dutch Shell is rallying today after saying it will stop paying dividends in shares for the first time since 2015. Europe's biggest oil company will stop the so-called scrip dividend from this quarter. It also reiterated a 2015 plan to buy back at least $25 billion of shares from 2017 to 2020. Now, that's subject to reducing debt further and a recovery in oil prices. At the same time, we're seeing Ocado shares surge more than 18% here in London after saying the French supermarket operator Casino has agreed to use its technology. Casino will use the UK online grocers system first on its monoprix.fr website. They will spend at least 2 years building a customer fulfillment centre to serve Paris and northern France. If we take a quick look at currencies as well, we're seeing the euro relatively flat this morning against the dollar, while sterling has dipped 0.1% against the greenback. It's currently at its weakest level in a week. Finally, if we take a quick look at bonds as well, Germany's 10-year yield falling less than 1 basis point to 0.34%. The lowest in almost 3 weeks. 10-year gilt yields have meanwhile increased less than 1 basis point to 1.254%. Back to you.
All right, Sandra, thanks a lot for joining us and giving us that heads up as to what's happening in the European markets today. Okay, then moving on, Hyderabad's playing host to some very big personalities. The Prime Minister who inaugurated the Hyderabad Metro earlier today will be hosting a special dinner for Ivanka Trump, a special advisor to the White House and Donald Trump's daughter. But before they get down to eat a royal meal, they will also be speaking at the inaugural session of the Global Entrepreneurship Summit being held at the city. Tamanna Inamdar, who is also flown down to the city of Pearl, joins us now from the venue to fill us in with what's expected there. Tamanna, what's the mood looking like?
Well, the Hyderabad Metro has been launched and Prime Minister Modi and Chief Minister of Telangana, KCR, are on their way to the Global Entrepreneurship Summit 2017, where all the action will begin in just a bit from now. The first session is Be the Change, Women's Entrepreneurial Leadership. The opening plenary session will, of course, have Prime Minister Modi speaking first, followed by KCR and then Ivanka Trump, who everyone is waiting to hear. The focus this time is on women entrepreneurs, with 52% of the delegates being women. We've had a chance to speak to a lot of interesting people all morning, but the real action will begin right here, 4:30 onwards.
And this time's theme is empowering the women entrepreneurs. Tamanna stepped out to speak to 3 such ladies who have decided to take the plunge, start something on their own, and she started by asking about creating equal opportunities at work for women. Listen in to what they had to say.
Well, we asked for a seat at the table, so we want to break all the ceiling, the glass ceiling, and by having a seat on the table, we want to create solutions, because 70% of Facebook is organized about women, but they are users. So we want to create creators of technology. When women create solutions of the world, we can speak about having more impact in the different aspects of the world.
Right. And what about you, Shireen? What has your experience been with equality in the workplace? People might assume that you work under difficult circumstances, or women in your country work under difficult circumstances.
I think we have to send the message for all the world that Palestine have cultural heritage, rich cultural heritage. Have the women was okay, they have the skills in crafts, or they have a lot of skills in many fields, but the political situation or similar circumstances is very difficult. But we have to say, we have to work, we have to stay alive as we deserve. So we will work.
You know, I just want to ask all of you ladies a question about a conversation point globally after the entire Me Too, string of tweets. When a lot of people, especially in the United States of America, have been talking about sexual harassment in the workplace. Do you have any thoughts on how through your businesses you can build safer environments for women to work in. Marta, would you like to speak on that?
Yeah, sure. I mean, I'm as a woman, I try to empower and I try to support women also. When I started my business, we started all women. And that was like that until this year that I hired a man. But it was, I mean, it wasn't on purpose, but at the same time, I wanted to support women. And yes, I mean, we have to help each other, we as women.
Guys, can we start? What would life be without the internet? And what if the internet was not accessible in a fair and equal or non-discriminatory way? Net neutrality is the principle that internet service providers should enable access to all content and applications regardless of the source and without favoring or blocking particular products or websites. At a time when the US is working to withdraw net neutrality, and that move is drawing a lot of criticism, the Indian regulator has taken a rather bold step in affirming our commitment to it. After much consultation, the TRAI has released its recommendations on net neutrality. And to talk about them, we have with us Chairman R.S. Sharma. Mr. Sharma, good afternoon. Thank you very much for speaking with Bloomberg Queen. Let me start by asking you to articulate the principle on the basis of which you have decided today that internet access should not be discriminatory in any fashion, and that access services should be governed by a principle that restrict any form of discrimination, interference in both the treatment of content as well as in the way it is delivered.
Yeah, so as you yourself said, that the overarching principle which actually guided us is essentially the fact that internet should remain an open platform. Nobody owns internet, and therefore internet belongs to everybody. So once having this principle in mind, what we have said is that no internet access service provider will be able to discriminate the access of content on the internet, either by way of differentially pricing it, and as you know, for that we had already issued regulation last February of 2016. Then no internet service provider will also be able to do a discrimination in terms of providing fast lane, throttling, or blocking the content. So these are now the part of those recommendations which we are sending into, which we have already sent to DOT.
All right. Sir, to understand better the many recommendations that you've made today, can you also explain whether some of these definitions are already hard-coded by TRAI, or should we expect the Department of Telecommunications to add to them? For instance, the definition of internet access services and the definition of specialized services, as well as the definition of Internet of Things. And I'll explain why I'm talking about this. You have said no discriminatory treatment whatsoever, but you've made two exceptions to that. One is for specialized services and one is for critical services or critical IoT services, if I may call it that. So can you lay out the principle behind both of these two and when the definitions will be clear?
Yeah, sure. See, the point is that once you are saying that there shall be no discrimination, this is the overarching principle. Now, obviously, there will be exclusions to that principle. Exclusion as in, certain services may be using the internet protocols, but they may not be, using the public internet. For example, as you know, the public internet is on the best effort basis. And there may be certain services where you have the quality of service specifications done because they are so critical by their very nature. And therefore, they have to be excluded from the provisions of these sort of stipulations of net neutrality. Now, let me give you an example of some of those services. For example, if you are having a remote surgery, now that remote surgery will require a dedicated connection to the other site. You are having, let's say, autonomous cars is another example. So what we are saying is that, or for example, enterprise-wide, networks created through leased lines and stuff like that. So these are some of the things which should remain outside the purview of net neutrality. So in some sense, we call them exclusions. Then there are other issues which are relating to pipes. which is essentially, when there is a traffic jam on the road, the road owner or the road operator has to provide for a smooth traffic control. So essentially what we are talking is the traffic management practices which the operators should be entitled to impose, because ultimately they are the ones who are running these networks. So one is traffic management practices. Of course, there are other eventualities, like for example, if the government has decided to block a site, then obviously this blocking will take place. Similarly, if there are emergency situations where fast lanes are to be provided, then those have to be provided. So essentially, we are on the one hand talking exclusions from the perspective of specialized services, and the other hand we are talking of traffic management practices and exceptions by way of ensuring that the traffic flows. For example, if there is a attack on the network, a cyber attack on the network, obviously the telecom service providers or the internet service providers will have to take adequate steps to ensure that the network is safe and secure, and for that particular period they may have to impose certain restrictions. So what we have said is that there are two issues. One is that these traffic management practices must be transient. That means they should be available, they should be applicable only for the time being. They should also be proportionate, and they should be transparent. So all these three attributes must be applicable to the traffic management practices. We have also provided for full disclosures. So there should be disclosure by the telecom service providers to the effect as to when did they apply these traffic management practices, and what were the effect of these practices on the consumer experience. So I think we have made appropriate pragmatic exceptions and exclusions to the policy, but then the overall goal remains that the consumer must have the choice of accessing any content on the internet, and the telecom service providers or the ISPs should not in any way be able to influence those choices.
Fair enough, sir. You've mentioned, if I understand correctly, that specialized services have been defined in your recommendations, but you've also said the Department of Telecommunications may identify specialized services. Just to understand this better, does this give the DOT leeway to add to your definition, or within the scope of your definition to identify specific specialized services that can avail of these exclusions that you referred to?
No, let's understand this, that there are two provisos which we have recommended. One is that these specialized services should not be a substitute for internet services.
Right.
So essentially one should not start using the term specialized services for a normal internet, and in garb of that provide fast lanes or other kinds of things to these services. So these are certain provisos which we have created. On the other hand, you should also understand that the kind of services which can happen in future, and which it's a developing field. It's not a static area. So technology is developing very fast, and what we have said is that the Department of Telecom may from time to time define these services, provided they satisfy the criteria which we have laid down in our recommendations.
Would the same principle apply to IoT services? Because the recommendations say that critical IoT services which may be identified by DOT and which satisfy the definition of specialized services would be automatically excluded. So there too the DOT has some leeway to be able to identify. Absolutely, based on changing technology?
No, what we are saying is that the IoT as a class is not specified as a specialized services, but there may be certain services which may require specialized treatment. For example, autonomous cars, as and when they come. So essentially, what we are saying is that specialized services will obviously depend on the nature of the evolving technology as they evolve. So we cannot hard code all the or enumerate all the services as specialized services. So that's why we have left that thing that the DOT as a licensor should be able to prescribe as to what other specialized services can be categorized as specialized services.
Okay, fair enough, sir. So when does this, and I have a couple of more questions. I'll come back to this in terms of, like, for instance, if I understand correctly, content delivery networks, are exempted from the scope of any restriction on non-discriminatory content.
Yes.
Again, can you give us some illustrations for us to understand exactly what you mean by content delivery networks and who would be availing of the exemption?
No, let's we all understand the content delivery networks, and I'm not going to define them for you. But what I can say is that there are certain websites which are very, very frequently, accessed. And what happens as the content, managers of those websites, they actually, in order to ensure that their customers have better user experience, they, hire or engage content delivery networks, which essentially cache these, contents, and then the cached content is kept within the premises or within the scope of the network TSPs or ISPs. So essential idea is that this way the content delivery networks facilitate the accessing of the content on the internet. So in no way this practice is discriminatory in the sense that the TSPs have no role to play in that. It is the content providers who are actually making arrangements to ensure that their content is easily accessible to their customers.
Sir, could you explain the timeline of how and when this will all become applicable? You have referred these recommendations to the Department of Telecommunications. Forgive me if I'm using the wrong word, but does that mean that the DOT needs to sign off on this? How does it proceed or progress from here?
No. Let's understand that this recommendation is within the TRAI Act, where the Department of Telecom, that is the Government of India, had asked the TRAI to provide comprehensive recommendations on net neutrality. Sure. That was last year in the month of April or May. And since then, so this is in compliance with their request that we have sent these recommendations today morning to the Department of Telecommunications. Now, obviously, it is for the Department of Telecommunications to take a final call, and these are merely recommendations.
Sure, sir, but I understand that you've also said this, and please explain this to me. You said these recommendations are being made without prejudice to the powers and functions conferred upon the TRAI as per the Act. Therefore, pending the consideration of these recommendations, the authority may regulate the manner in which the current licensing requirement of unrestricted access to all content on the internet is implemented and enforced. The authority may also frame regulations or take other measures as and when deemed necessary. So now does the ball shift into the DOT's court, or does the TRAI, having made these recommendations, still have within its powers the right to enforce them?
I think this is a very important question which you have asked. Essentially, what happens is that the TRAI Act provides certain powers to Telecom Regulatory Authority of India, and these are in the domain of, let's say, tariff fixation. So on tariff, the TRAI has complete control. Similarly on interconnections, similarly on quality of service. So there are certain areas which fall within the TRAI jurisdiction. So what we are saying is that these recommendations may contain all kinds of, these recommendations may have some elements of, quality of service, some elements of tariff, and therefore those elements on which TRAI has the powers to regulate, TRAI will continue to regulate. That's what we have essentially said. So, for example, if you recollect, last February of 2016, we issued a regulation which actually prohibited the discriminatory tariff on the internet. So essentially, that regulation we did not send to the government because tariff is our area of operation. Tariff is where we have the mandate under the TRAI Act. So that's what we are basically saying, that these recommendations will not obviously affect the functions which TRAI is performing under its Act.
So are you telling me, sir, that in the worst case eventuality, the DOT may choose not to implement these recommendations?
No, this is not a question of that. It's a question, it's just basically we are it's just clarifying that these recommendations, obviously DOT has the absolute prerogative to accept these recommendations, not accept these recommendations. That's their prerogative. They asked for the recommendations and we have given the recommendations. So that's where the matter ends.
All right. Do you have any, or can you share any information with us on what could be the potential timeline? Because from what I understand, all the licensees will in effect have to be redone. So this provision of net neutrality will have to be included in all the license conditions for all the various categories of licenses, etc. And thereafter, there might be some rule making also required, for instance, on I think some of these areas that TRAI has already defined. In case the DOT would want to further define them, specialized services, the critical class of IoT, what is the timeline for all of this to become a reality of sorts?
No, let me put it this way, that while the unified license may not actually speak about the internet access services, but the broad spirit of unified license is very clear that the telecom service providers shall provide access in a non-discriminatory manner, without any sort of discrimination among subscribers or among the various classes of subscribers. So therefore, it is not as if the current provisions of the license do allow any scope of discrimination and like that. What we are saying is that we must we must update in some sense in this new digital world. We must update the licenses in terms of very clearly saying that the internet access will be following these principles of net neutrality.
By when do you expect this to be a reality, Mr. Sharma? Assuming that the DOT will take on record your good effort on this and will accept all your recommendations in total.
I think you are asking the question to a wrong person. It is for the DOT to, you should ask the DOT secretary this question, but I'm sure the government had asked for our recommendations. We have given our recommendations, and I'm sure government will give the due thought to the recommendations.
No, of course, I'm not denying that at all. It's just that at this point in time, this net neutrality debate has taken an odd turn worldwide. In the US, as you know, the FCC is reconsidering withdrawing it in the face of, tremendous opposition from citizens and activist bodies. And so I'm just curious to know whether we are committed to a timeline on being able to implement these net neutrality principles that you have articulated, or that this debate may veer off course in the days and weeks to come thanks to Western influence?
Is that a question or a comment?
It's a question.
So, I can't really give you the timeline because, as I explained to you, it is the recommendations are to be accepted by the Department of Telecom. So we'll do that. The only thing which I can say is that these recommendations have been taken, are being given after a huge, longest running consultation, I think, in the history of TRAI. I'm not sure as to whether any subject has been deliberated and consulted for such a long time. As you know, the DOT gave a reference to us in the April of last year, and from then on we had a pre-consultation paper on net neutrality in the month of May last year. And then in January this year, we issued this consultation paper, and it has again taken about 10 months to sort of fructify or to come to a conclusion. We have consulted all stakeholders. And the only thing which I can say, as in our view, in the TRAI's view, this is actually very, very, contextual in the sense that for a country like India, where the internet is really a platform for innovation, information interchange, and riding a lot of applications, I think it's extremely important for us that the internet as a platform is kept open, free, and without any discriminatory principles of access. So I think it is very, very important from our country's perspective. We have programs like Digital India, we have programs where we are having the digital identity infrastructure, we have the unified payment interface, we have banking. Everything is riding on the internet, the health, education, irrigation, agriculture. So essentially, if internet is such an important sort of platform, on which a lot of these applications and systems are going to ride, it is important that that platform is kept open and free.
We'll let that be the last word, sir. Thank you very much for explaining the recommendations that you have issued today. We hope that the Department of Telecommunications pays heed to them very quickly and this becomes a reality in India very quickly. Thank you, Mr. Sharma, for joining us here on Bloomberg Quint.
Thank you very much.